You really think your portfolio can survive the real world? What happens when your perfect plan meets a world that doesn't care? What will you do when the next market crash wipes out the strategy you thought was bulletproof? Because let's be real, your investments haven't been tested. Not by a real financial crisis, not by a black swan event, not by the kind of chaos that rips through markets and exposes every weak spot in your so-called plan. The false security of a spreadsheet. You've run the numbers. You've read the expert predictions. Maybe your portfolio looks solid on paper, diversified, balanced, built for the long run. But the market doesn't care about your spreadsheet. Those historical returns, they don't guarantee the future. That perfectly weighted asset allocation. It assumes a world that stays rational. That long-term strategy. It only works if you can survive the short-term destruction. Your portfolio isn't tested by calm. It's exposed by chaos. When times are good, everyone looks like a genius. It's easy to feel confident when the market keeps climbing. When money is cheap, when your net worth is growing. But bull markets breed complacency. And easy growth creates delusions of control. Because the real test of your portfolio isn't how well it performs in good times. It's how badly it collapses when the world flips upside down. When inflation eats into your savings. When your safe bonds aren't so safe anymore. When the next recession drags your stocks down 40% overnight. Most people's plans don't stand a chance. Right now, you might think you're prepared. But ask yourself, have you built your portfolio to survive pain or just to grow in comfort? Because real life doesn't follow the charts. The market won't warn you before it crashes. Your retirement fund won't wait until you're ready. The economy won't move according to your plan. So the real question isn't whether your investments look good today. It's whether they can survive what's coming next. And if you haven't thought about that, you're already in trouble. The myth of stability, how your money is built on sand. You think your money is safe. Your investments are solid. Your future is secure because history says so, right? Wrong. Nassim Taleb warns that most financial plans are fragile, built on the naive belief that the future will always resemble the past, that markets will recover, economies will stabilize, and the system will keep functioning as it always has. But that's the most dangerous lie you've been sold. The illusion of a predictable future. Look at how people build their financial strategies. They assume the market will behave. They assume recessions will be mild. They assume that even if things get bad, recovery is inevitable. But real life doesn't care about assumptions. Black swan events. The destruction. You didn't see coming. Markets don't just correct, they collapse. Recessions don't always pass, they linger. Recovery isn't guaranteed, it's a privilege of the past, not a promise of the future. And all it takes is one black swan event to obliterate everything overnight. A global disaster, a war, a financial system breakdown, the kind of chaos that makes every spreadsheet, every forecast, every expert prediction instantly worthless. The system rewards, ignoring risk until it doesn't. For years, people who ignored risk have been rewarded. The ones who took on more debt got richer, until interest rates spiked. The ones who assumed stocks always recovered looked smart, until the next decade of losses. The ones who laughed at worst-case scenarios felt invincible, until they lost everything. Because that's how the system works. It lulls you into complacency, then pulls the rug out when you least expect it. How much of your wealth would survive? So ask yourself, if everything you depend on collapsed tomorrow, how much of your wealth would survive? If the market plunged and didn't recover? If your job disappeared and never came back? If inflation shredded the value of your cash? Would you still be standing? Or would you be one of the millions realizing too late that stability was just an illusion? Because if your money is built on sand, it's not a matter of if it will crumble. It's just a matter of when. How fragile wealth disguises itself as success. Your portfolio looks strong. Your investments are growing. Your net worth is climbing. You feel secure, safe, untouchable. But are you really? Or are you just lucky nothing's gone wrong yet? The illusion of strength. People mistake short-term success for financial security. Their account balances rise, so they assume they're getting richer. Their investments gain value, so they assume they're well-positioned. Their income stays steady, so they assume the system is working. But none of this proves real strength, because fragility hides beneath the surface, waiting for the first shock to rip it wide open. Fragility isn't obvious until it's too late. When the market is booming, everyone looks like a genius. People over-leverage, thinking more risk, more reward. They keep dumping money into stocks, assuming prices always bounce back. They stretch their budgets for a bigger house, a nicer car, a lifestyle they believe is sustainable. But the cracks don't show when things are good. They show when things fall apart. A sudden market crash, a layoff, an economic downturn, a liquidity crisis. And suddenly, everything that looked solid crumbles instantly. Growth doesn't always mean strength. Here's where most people go wrong. They assume that just because their wealth is growing, it must be stable. But that's not always true. A rising stock portfolio doesn't mean it's shock-proof. A bigger paycheck doesn't mean job security. A growing business doesn't mean it can survive a recession. Growth isn't the same as resilience. And the moment things stop going perfectly, that's when most people learn how fragile their success really was. Ask yourself the hard question. So take a step back. Look at your financial situation. Is your wealth actually secure? Or does your confidence depend entirely on things staying perfect? Because real security means you can take a hit and keep standing. Most people can't, and if you haven't prepared for the moment when things go wrong, then maybe you're not as safe as you think. Taleb's solution. Build something that thrives on chaos. Most people want stability. They build their wealth, their careers, their entire lives on the assumption that things will stay predictable. But what happens when the world stops playing along? Nassim Taleb doesn't believe in stability, he believes in anti-fragility. Because fragile systems break under stress. Resilient systems survive, but anti-fragile systems, they grow stronger from the shock. And that's the kind of wealth you should be building. Why stability is a dangerous addiction. People cling to comfort because it feels safe. They buy into the idea that markets always recover. They take on debt, believing that steady income will cover it. They build a single source of income and assume nothing will disrupt it. But comfort is fragile. The second the system shakes, everything they built starts to collapse. Taleb's solution? Stop protecting fragile systems. Start designing ones that benefit from uncertainty. Anti-fragile strategies thriving in uncertainty. Taleb's concept of anti-fragility isn't just about survival, it's about winning in chaos. Here's how: low or no debt. If you owe nothing, volatility can't take you down. When others panic about job loss, market crashes, or rising interest rates, you're unshaken because no one owns a piece of your future. Small, diverse investments that gain from volatility. Instead of chasing one big bet, anti-fragile investors scatter their risk. They take small positions in high-risk, high-reward opportunities, knowing that while some will fail, others will explode in value. Multiple income streams. A single paycheck is a weak foundation. Anti-fragile people don't just rely on one job. They build businesses, investments, and side incomes that thrive in different environments. Using chaos as fuel, most people fear market crashes, recessions, or uncertainty because their wealth depends on things staying stable. But anti-fragile systems, they thrive in chaos. Market crash? Buy undervalued assets while everyone else panics. Job loss? Fall back on multiple income streams instead of scrambling for survival. Economic crisis? Use the downturn to invest, expand, and grow when others are retreating. Real wealth wins, no matter what. So ask yourself, is your wealth built to survive or to get stronger every time things go wrong? Because real wealth isn't about avoiding storms. It's about getting stronger every time one hits. The high cost of playing it safe. You think you're protecting your money, keeping it safe, avoiding risk. But what if your safe strategy is actually destroying your wealth, slowly, quietly, without you even noticing? The illusion of safety. Most people park their money in low-yield savings, bonds, or safe investments because they're afraid of losing. They avoid stocks because markets are too volatile. They won't start a business because it's too risky. They sit on cash because they don't want to make a mistake. And they tell themselves they're being responsible. Smart, protected, but are they? How safe strategies slowly drain your future. Here's what's really happening. Inflation is eating your money alive. The cost of living rises, but your safe account barely keeps up. Every year, your purchasing power shrinks. Hidden fees quietly steal from you. Banks and financial institutions profit off of your fear, charging fees that slowly erode your wealth. Lost opportunities cost more than losses. While you wait on the sidelines, others are investing, building, and growing their wealth. You don't just miss out, you fall behind. Avoiding risk is just another form of losing. Nassim Taleb warns that avoiding risk isn't protection, it's surrender. The person who never invests guarantees they'll never see real returns. The person who fears failure ensures they'll never experience success. The person who avoids discomfort locks themselves into mediocrity. Because playing defense forever doesn't keep you safe. It guarantees a slow, quiet failure. Inaction is the riskiest move of all. Most people think taking risks is dangerous, but the real danger, never taking any. Because while you're waiting for the perfect time to act, time is passing. Markets are shifting. Inflation is compounding. Your financial future is shrinking. What's really safer? So ask yourself, is it safer to hoard your money and watch it slowly lose value? Or to start positioning yourself so that when the chaos hits, you don't just survive, you thrive, because the world won't wait for you to feel ready. And if you're still sitting on the sidelines when the next opportunity comes, you've already lost. Why small losses? Now protect you from total collapse. Later, most people are terrified of losing. They avoid risk, dodge discomfort, and try to protect themselves from every setback. But Nassim Taleb argues that small, regular failures aren't just necessary. They're what keep you alive. Because the systems that avoid small losses, they're the ones that end up collapsing completely. Fragile systems break under pressure. When something is fragile, it hates volatility. It resists small hits, avoids risk, and looks strong until it isn't. The economy that ignores early warning signs crashes hard. The investor who never takes small losses gets wiped out in a downturn. The business that never experiments sinks when the market shifts. They look safe, but they're exposed. And when the real shock comes, they have no idea how to handle it. Anti-fragility, strength through small failures. Anti-fragile systems embrace small losses because they build long-term strength. They take controlled risks, test ideas, and let small things break. So bigger, here's what that looks like. Taking calculated investment risks, not betting everything, but diversifying in ways that let some losses fuel future gains. Testing new income streams, trying side projects, businesses and investments, knowing that some will fail, but the ones that work create security. Letting weak ideas fail early. Instead of holding onto a bad investment, a toxic job or a failing strategy, cutting losses fast before they grow into disasters. If you're not taking hits, you're waiting for a knockout. Most people live in fear of losing anything. They don't realize that the longer they avoid small risks, the bigger the explosion when things finally go wrong. Because life will test you. The market will crash, jobs will disappear, unexpected events will hit. And if you haven't built resilience through controlled failures, you'll be one of the millions blindsided by reality. So ask yourself, are you taking small losses now, or are you unknowingly setting yourself up for a catastrophic collapse later? Choose survival or illusion. The game is already on. You have two choices. Keep pretending your fragile plan is solid. Keep telling yourself the market will always recover, that your job is secure, that you'll figure it out later. Or admit that your foundation is weak, rebuild, and prepare for what's coming. Because whether you're ready or not, the game has already started. Fragility hides until it's too late. Nobody sees their downfall coming. The retiree who thought their savings would last until inflation gutted it. The investor who ignored risk until the market wiped out years of gains. The worker who assumed they were indispensable until their job vanished overnight. The problem with fragility is that it feels like stability until the moment it breaks. And by then, it's already too late. Most people get destroyed by the risks they ignore. It's not the unpredictable that ruins people. It's the obvious risks, the ones they saw but refused to prepare for. They ignored debt until the interest crushed them. They avoided investing until inflation ate their savings alive. They depended on one income until they had none. And yet, even with all the warning signs, they did nothing. Because procrastination is fragility's favorite weapon. Stop thinking in terms of if. Start preparing for when. Most people treat financial disasters like a hypothetical. If the market crashes, if my job isn't secure, if things don't go as planned. But there is no if. Recessions will happen. Layoffs will happen. Inflation, debt crises, unexpected chaos, they're all part of the game. The question isn't whether disaster will strike. It's whether you'll survive when it does. So, which one will you be? When the next collapse hits, will you be the one watching it all burn, scrambling, panicking, realizing too late that you weren't ready? Or will you be the one getting stronger in the fire? Because you built something that doesn't just survive shocks, but thrives on them. The game is already on. Are you playing to win, or just waiting to lose? If you're done trusting fragile systems, prove it. Comment anti-fragile mindset. If you're ready to build wealth that survives anything, most people will stay asleep, ignoring the risks until the crash wakes them up. But the ones who prepare now, they'll survive while everyone else scrambles. And this was just the beginning. There are more financial illusions to destroy, more lies keeping you broke. Only those willing to rethink everything will make it through what's coming. Stay tuned. The next truth will hit even harder.